Welcome to the Fiscal Philosophy YouTube channel, everyone. Remember when is, as some say, the lowest form of conversation. However, I remember a time not too long ago when I was getting into PayPal. I was told this is a dead business, that Apple Pay and Cash App are going to destroy them, and this and that and the other thing. However, this has not been the case. And the market has finally started to realize over the past 12 months or so that, actually, there is something of value here in this business. We have currently a market cap of $89 billion, EPS of $4.20, and a trailing PE of 21 with a forward of 19. Let's take a look beneath the surface and see if this is still any good in my view. So let's go straight to the culprit of why the share price of PayPal dropped like 80% in the first place from its all-time highs. Well, it's of course the deceleration of their revenue growth. Notice I didn't say that their revenue decreased or even went flat and stopped growing altogether. It's just that it decelerated, it slowed down. It is still growing, but this is a phenomenon you get when businesses get to a sort of a mature level. The rate of revenue growth will slow down the higher the revenue gets. It's incrementally harder the higher revenue is to continue to drive more revenue. And this is because there's only so many customers out there. And if you have, for example, a very high margin business, other operators will recognize that and compete with you on price to steal customers and that kind of thing. So it's harder to drive the top line the bigger you get. And I think PayPal is just a pretty mature business, and they're at that point where they can, maybe incrementally increase their revenue in a few different ways. But the days of 25, 30% every year they're just behind us. I think we just need to come to terms with that and value the company appropriately with that in mind. So what you have, I think, and this is probably the reason the stock price has finally started to go up, is I think everybody that was really upset with the share price fall in PayPal probably just at this point either took their loss or decided that they're just going to bag hold and not really look at it every day anymore. And then you also got a rotation into it, maybe from value investors or such, a little bit like I consider myself to be. And there you have them saying, hey, like this company just fell like 80%. It's down in the dumps. This is probably a bit of an overreaction. The stock price is not all that stretched, and they do a lot of buybacks, and hey, they have a lot of free cash flow, etc. And I'm in that camp, right? That's how I was seeing it when it was around $60 per share. And in the 50s and 60s, I think it was probably a pretty good buy in that range. And, the people that bought in at that time have had no reason to sell it because it hasn't really cratered or anything from there, and nor has it really realized its expected value, its fair value. And so over that time, the company itself also seems to have accelerated their buyback program. And as a result of there not being necessarily a whole heck of a lot of sellers anymore, and a lot of the people buying it for a value play, so to speak, a cigar butt, if you will, plus the buybacks that the company put in, it's no surprise to me that the stock has gone up between 40 and 50% over the last year, given all of that. And hey, like even at the level they're at now, buybacks aren't terrible, right? And they probably are still going to do them unless the stock price like really takes off and jumps. As to whether PayPal is still, investable today, you do see on the analyst price forecasts a range of 60 to 115, middle being very close to today's share price. And I think with the information we have out there available today, I do think that somewhere in anywhere from like maybe 85 to 95 is probably somewhat reasonable. Like if you put what's known right now and like what's like reasonably expected into some kind of a DCF, you'll probably come out in that range is my sense of it. And I think that's also why the price probably has been flirting with that $90 level lately, but not really getting past it at all, even when it seems like there's a lot of enthusiasm on a specific day. Now, I personally, I liked it at, 60 and below. Basically, my basis is like $59 because I thought at that point it was just like, it was pretty obvious that if they didn't like just suddenly crater on their free cash flow, that it was probably going to recover and give me a pretty good return. That was just the sense I got. But if you got into it thinking it was going to be Meta 2.0 and that we were going to get back to all-time highs anytime in the near future at all, you're going to be disappointed, okay? This is not Meta 2.0. There was no reason this stock ever should have been $200, let alone $300 per share, and a pullback to some extent was appropriate. Even a 50% plus pullback, it was 80%, which I think was maybe a little too far, but certainly there was good reason why there was a pullback in this stock price. So my thinking here with regards to the valuation is mainly that I'm thinking in terms of the price to earnings because it's based on net income. Why net income, not free cash flow? Well, they're giving out so much stock-based compensation that it kind of skews the numbers and almost makes the free cash flow look artificially good. And I just prefer to use the more conservative multiple. And so, the PE currently is 21, forward, which takes into account like projections and guidance, analyst expectations, whatever, is showing about a 19. So let's split the difference and say PayPal's roughly 20x right now. The question you have to ask is, with the growth that we're seeing in PayPal and with what their CEO plans for the future and some of the things that they unveiled in the recent thing where they were going to shock the world or whatever, is that worth a 20x? And I don't think 20x is that ridiculous for a company that's still growing decently. They're not growing a ton, but they're growing decently. But would I pay 25x or 30x? I don't think so. So I don't really think that PayPal is going to necessarily explode another 30-40% from here in the short run, unless they put up just some absolutely crazy work with their numbers. To me, it seems like it's a maturing business, and they'll slightly grow revenue and maybe make that revenue slightly more profitable. And we're just not going to see that massive growth like we used to see. And so I think somewhere in this area is probably relatively reasonable when all is said and done. I might reevaluate a little bit if they can get down that stock-based compensation. That would definitely make it more attractive. But I wouldn't personally be looking to add here near the $90 level. I might ride my $59 cost basis a little bit more and see if I can break 100 or so maybe. But I'm not really I'm not looking to add at this level. It was kind of obvious in the 60 or below range, but now at this point it's like, okay, we're probably about at equilibrium at this point, is my sense of it. If you are also in PayPal, let me know in the comments below if you think I'm right or wrong on the price. If you made it to the end of the video, I'd like to say thank you and also ask you, please like and subscribe for the algorithm. Help me out, grow the channel. Consider my Discord linked in the description. Follow me on the X platform at Mr. Macho Mog, and catch me Saturday, 8 p.m. Eastern on Cashflow Kings Live. Best finance podcast there is. Take it easy, everyone.